All right, Lisa, tell us more about the mediator's role when it comes to financial assets.
So the mediator is generally going to be an attorney, not a financial professional. And so what happens is they're going to have the parties exchange these forms that are mandated forms in the state of California, and they're called financial disclosure forms. There's an FL 150, stands for Family Law 150. That's an income and expense form. There's an FL 142 form, which is a schedule of assets and debts. And these forms are exchanged hopefully before mediation, right? That would be the goal, because otherwise you don't know what you're, negotiating over. And the mediator, though, isn't there to interpret the financial statements and tell you what this means and what meaning to make from the financial statements, or what proposals to come out with, and whether you can afford things or can't afford things, or is there a tax repercussion, right? So the way to do this is to either you have two options here. I mean, first off, you're going to hopefully have a legal consult. I mean, that's what we talked about, is having your independent consulting attorney who is mediation friendly, who's not going to try to blow up your deal. You want them to be supportive, but also you might go to a financial professional. Now, there is a range of, there's a range of financial professional credentials out there. You could go to a CDFA, Certified Divorce Financial Analyst. You could go to a Certified Financial Planner, CFP. You could go to a forensic accountant. Some people try to go to their own CPA, which I don't think is right during the divorce pendency, because you want somebody who's trained in the area of family and divorce, the laws and what the courts do. So that in itself, we could do a whole video on that, but I'm not going to talk about that for the moment, because really there's a big distinction and there's a role for each of these different types of financial professionals. But the key thing to know is the mediator isn't going to go through that asset and debt listing, that FL 142. They're not going to go through and go, oh, here's what I think you should do, because that's starting to give legal advice. Most mediators, the well-trained mediators, they're going to remain neutral and facilitate the proposals back and forth. When they stay in that facilitative style, it is really incumbent on the two clients in the mediation room to know what they're doing. Now, if you don't feel comfortable, you could bring a financial professional into the mediation session and have them join as part of the team. Doesn't have to be for every single meeting, but when you're discussing anything with financial implication, having them there could be a real boost to helping you understand financial repercussions like capital gains taxes, income taxes, right? Well, if I take this asset, is it pre-tax or post-tax? What category of asset am I getting? So to me, as a mediator, I'm almost always encouraging, unless there are really almost no assets in the case, I'm almost always encouraging the clients to have a financial professional either in the mediation room who they retain jointly, or someone on the outside to consult with each of them separately.